election year. Talk about a roller coaster for investors, am I right?
Oh, absolutely. Uncertainty is running high, and, well, the market doesn't exactly love surprises.
Exactly. So today, we're taking a deep dive, getting into those nitty-gritty economic indicators that actually matter.
It's not just about who wins in November, it's about understanding the bigger picture.
Exactly. It's about electionomics. That's what
Yeah.
we're calling it anyway. How politics and your portfolio really intertwine, because we all want to be making smart decisions no matter what happens, right?
Absolutely. Knowledge is power, right? The more informed you are, the better equipped you'll be to navigate those market ups and downs. It's like everyone suddenly becomes a market expert during an election year.
Right. It's like everyone's got a hot take, a prediction, but should we really be trying to time the market based on who takes the Oval Office? I mean, is that even realistic?
You're hitting a really important point there. It's tempting to think that way, but honestly, it's not the most effective approach.
So what should we be focusing on then? What's the secret sauce here?
It all boils down to the economic fundamentals. Think of them as the driving forces behind market performance over the long haul.
Okay, I like where this is going. So we've got these fundamentals, but elections, they're still a pretty big deal, right?
Definitely, they're significant, but think of it this way. Elections, they're like the weather. They can cause some short-term shifts and changes.
Yeah, okay, and we get.
But economic fundamentals, they're more like the climate. They shape the overall landscape.
That's a great analogy. So let's break down these climate factors, these economic indicators. What should investors actually be keeping an eye on?
Well, first up, inflation, right? It's something we all see and feel every day at the grocery store, filling up our gas tanks.
Absolutely. Everything seems to cost more these days.
Right. It's the rate at which prices for those everyday things, goods and services, are increasing.
Okay, so inflation. Check. Why does that matter so much for investors, though?
Well, high inflation, it actually erodes the purchasing power of your money over time.
Yeah.
Can also lead to those dreaded interest rate hikes, which we'll get to in a sec.
Okay, got it. Inflation, interest rates, they're all connected. So interest rates, what should we be watching out for there?
Interest rates, think of them like the cost of borrowing money for both businesses and people.
Right, got it.
When those rates are low, businesses are more likely to invest, consumers are more likely to spend, and all that activity can really stimulate the economy, right?
Makes sense.
But here's the catch. If rates rise, it can actually put the brakes on economic growth a little bit.
It's a balancing act then.
Exactly. And who's walking that tightrope? That would be the Federal Reserve.
The Fed.
Yeah, they're the ones setting those key interest rates, and they're always trying to find that sweet spot, that balance between encouraging growth, but also keeping inflation in check.
They don't want things to go too fast or too slow. That's pretty tricky.
You got it. And here's the thing, the Fed's decisions, they're influenced by so many different factors: employment data, consumer spending, even what's going on with the global economy.
It's all interconnected. So much to keep track of.
It's a lot.
No wonder everyone feels a little lost during election season.
But hey, that's what we're here for, right? To break it all down.
Absolutely. So we've got inflation, we've got interest rates.
Yeah.
Anything else we should have on our radar?
Oh, yeah. Corporate earnings. How profitable companies are, that's always a big one.
Of course, because ultimately you want to invest in companies that are doing well. Right.
Exactly. It's a peek into the overall health of the stock market. But it's not just about the numbers themselves.
Okay, so it's more nuanced than that. What else is there?
It's about how those earnings stack up to expectations. Did they exceed them? Fall short?
Ah, investor sentiment. Right. That feeling in the air.
Exactly. Because even if a company's posting record profits, if those profits don't meet those sky-high predictions analysts put out, the market, well, it might not react so well. That's investor psychology for you.
It's true. They can be a fickle bunch. Okay, so we've got these core indicators: inflation, interest rates, corporate earnings.
Yeah.
But how do we actually analyze this stuff? What's the playbook here?
That's the million-dollar question, right? And it gets really interesting when you start to look at real-world examples. Remember back in 2017 when the Trump administration slapped those tariffs on goods from China?
Oh, how can I forget the whole trade war era?
Nah.
It felt like every day there was another headline, another development.
Exactly, and it definitely created some waves in the market.
Definitely had everyone on edge.
It's a perfect example of how a single policy decision, in this case tariffs, can ripple through the market and impact specific sectors and companies in a big way.
Okay, yeah, tariff, trade wars, China, man, that feels like yesterday. How did all that actually play out in the market, though? What was the real-world impact?
Well, let's take Apple, for instance. They manufacture a huge chunk of their products overseas, right, in China. And when those tariffs hit boom, their production costs went up, putting a squeeze on their profits.
So even a giant like Apple isn't immune to those global shifts.
Nope, not at all. And then on the flip side, you've got your domestic steel producers, companies like U.S. Steel. They actually saw some benefits from those tariffs. Remember, the whole goal was to protect American industries from foreign competition.
Right, right.
And for steel, well, it worked. Demand went up, so their stock prices followed.
Interesting. So one policy decision creates winners and losers across different sectors. It's a domino effect.
It is. It's all connected, and that's why understanding the potential impact of this upcoming election is so important. What are the candidates saying about trade, infrastructure, taxes? It all matters.
So we need to be political analysts,
Hmm.
A&D financial analysts now. How can our listeners keep up with all this without getting totally overwhelmed?
You don't need to become a policy expert overnight. There are plenty of resources out there to help make sense of it all, like the Wall Street Journal or the Financial Times. They often have really great analysis pieces that break down the potential economic impact of different policy proposals.
Okay, so we're not just shooting in the dark here. There's actual data and analysis we can use to make smart decisions.
Hmm.
But what about diversification? We hear that word a lot in the investing world. How does that all fit in with this election uncertainty?
Diversification. Absolutely crucial, especially now with everyone on edge. Remember our climate versus weather analogy?
I do.
Diversification is like having an all-weather portfolio. You're prepared no matter what the market throws at you.
Okay, I like that. So less about predicting the storm and more about making sure our portfolio can handle any weather.
Exactly.
But how do we actually do that? What are the key ingredients to a diversified portfolio?
It's all about spreading your investments across different asset classes, not putting all your eggs in one basket, as they say. And when I say asset classes, I mean stocks, bonds, real estate, maybe even commodities like gold.
Wow, so a little bit of everything.
Exactly. And even within each asset class, you can diversify even further. Like with stocks, maybe consider different sectors, tech, healthcare, energy,
Yeah.
and different company sizes too. Large cap, small cap.
So it's about spreading that risk, not being overly reliant on any one company or sector or even asset class.
You got it. And the good news is you don't have to be an expert to do this well. There are tools out there to help.
Tell me more about these tools. What should our listeners be looking into?
Okay, so not to sound like a broken record, but diversification is key. Got it, got it. But how do we actually make that happen? What are these tools you mentioned?
We've probably heard of ETFs, right? Exchange traded funds.
Yeah, ETF, sure.
They're like baskets of stocks or bonds that track a particular market sector or index.
Mm-hmm.
So instead of buying stock in, say, 10 different tech companies
Yeah.
individually,
You could buy into an ETF that covers the whole tech sector in one go.
oh, that's interesting. So it's like instant diversification.
Exactly. And often with lower fees than managing all those individual stocks yourself,
Mhm.
which is a nice bonus.
Definitely a bonus. That's really helpful.
Huh.
What about bonds, though? We talked about them being kind of a safe haven during times of uncertainty, especially during something as unpredictable as an election.
Absolutely. And the great thing is there are bond ETFs too. You can find ones that focus on government bonds. Those are generally considered super low risk.
Right.
Or you can go for corporate bonds. Those might have slightly higher yields, but of course with a little more risk involved.
So it's all about finding that balance, that right level of risk for you.
Exactly.
This is why I love these deep dives. You always walk away feeling like you've actually learned something new and useful, not just the same old investing advice.
Well, that's the goal, to empower you with the knowledge you need. Because at the end of the day, knowledge, that's real power when it comes to investing.
So true. So as we head into November and things start to heat up even more, what are your final pieces of advice for our listeners? I know I'm feeling a little bit like I'm strapped into a roller coaster right now.
First and foremost, don't panic. Easier said than done, right? But seriously, take a deep breath. Don't let all that political noise drown out those economic fundamentals we talked about.
Right, right. Tune out the noise.
Exactly. And remember, investing, it's a marathon, not a sprint. The goal is long-term growth, not those quick, flashy gains. So don't make any rash decisions based on election jitters.
Stay calm, stay informed, stay the course. I like it.
That's it. And remember, you're not alone in this. There are tons of resources out there to help you along the way. Talk to a financial advisor, stay up to date with reputable financial news sources. Even websites like Investopedia can be super helpful.
Those are great tips. This has been an amazing deep dive. I feel like we've really demystified Electionomics a bit today.
Glad to hear it. Always happy to talk about investing in economics.
To our listeners, thanks for joining us on this wild ride. Remember, knowledge is power, and a well-diversified portfolio, that's your best bet no matter what curveballs the market throws your way. Until next time, happy investing, everyone.